Hi, this is Dr.S.VALLUVAN from MBA. In this teaching video, we are going to cover the topic of accounting standards and reporting. The topic is about INDAS, that is Indian Accounting Standards. The terminology represents Indian Accounting Standards converged with IFRS. IFRS abbreviation is International Financial Reporting Standards. So, in Indian accounting standards, we are having our own set of rules and regulations on accounting practices. Along with that, we are converging with international financial reporting standards. That is why it is called as INDAS. INDAS means Indian accounting standards converged with IFRS. Now, second slide depicts the introduction to accounting standards. These are the topics which we are going to cover in this video. Introduction to accounting standards, IFRS converged INDAS, what is IFRS, why it is needed, roadmap to IFRS, IFRS converged INDAS, comparison between INDAS and older Indian accounting standards. So before we get into the topic, let's understand about the accounting standards. What is accounting standards? An accounting standard is a common set of principles, rules and regulations and procedures that define a basis of financial accounting policies and practices. Accounting standard is a set of practices to apply to full breadth of entities' financial pictures, including assets, liabilities, revenues, expenses, and shareholders' equities. Banks, investors, and regulatory agencies count on accounting standards to ensure the information about a given entity is relevant and accurate. Accounting standards improve the transparency of financial reporting in all countries. In the United States, the generally accepted accounting principle, that is GAAP, GAAP. The abbreviation for GAAP is Generally Accepted Accounting Principles. Form the set of accounting standards widely accepted for preparing financial statements. So, for preparing and presenting the financial statements, the accounting standards, rules and practices are helps, which are set by the International Accounting Standards Board. Only the IFRS is set by the International Accounting Standards Board, IASB. It serves as the guideline for non-US GAAP companies reporting financial statements. The generally accepted accounting principles are used widely among the public and private entities. In the United States, the rest of the world primarily uses IFRS. Multinational entities are required to use these standards. The International Accounting Standards Board establishes and interprets the international community's accounting standards when preparing financial statements. Accounting standards relate to all aspects of entities' finances, including assets, liabilities, revenues, expenses, and shareholders' equity. Specific examples of accounting standards include revenue recognitions, asset classifications, allowable methods for depreciations, what is considered depreciable, lease classifications, and outstanding share measurement. The American Institute of Accounts, which is now known as American Institute of Certified Public Accountant, and the New York Stock Exchange attempted to launch the first accounting standards in the year 1930s. Following this attempt came the Securities Act of 1933, and the Securities Exchange Act of 1934, which created the Securities and Exchange Commissions. Accounting standards have also been established by the Governmental Accounting Standards Board of Accounting Principles for all the state and local governments. So simply put, accounting standards are nothing but is a principle that guides and standardizes accounting practices. In India, we are having an Indian GAAP. The United States, they are having their set of own accounting standards, rules and regulations. That is called US GAAP. So GAAP is nothing but the generally accepted accounting principles. So a group of accounting standards that are widely accepted as appropriate to the field of accounting. Why accounting standards are needed? Or what is the aim of accounting standards? The main primary objectives of accounting standards is to establish recognition, measurement, presentation, and a disclosure requirement dealing with the financial transactions and key event important in the financial statement of companies. That is the main purpose of accounting standards. Thank you.